Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. I'm Spencer Israel, joined by Joel Elconin and Dennis Dick. On the show today, really only one thing on our radar, and that is earnings. We have a lot of those to discuss. Abbott, GE, Comcast, Baker Hughes, UTX, just a ton. So we'll try to cover as many of them as we can. Our guest today is Greg Harmon. He will be joining us at 8:35. He's with Dragonfly Capital Management. Joel, tell us how we're doing this morning in the S&Ps.
We're doing pretty good as usual, Spencer. Trading in the green by 575 at 45 and a quarter. Made a new all-time high at 47 and a quarter. That's a target on the upside. Pre-market low down at 36.75. That's right around your close from yesterday. So we'll be keeping an eye on that. Yesterday's close in the S&P was 37.5. We have crude still trading in the green here, up 28 cents, trying to break into the 65 handle. Current high 64.79, low of the session 64.34. And gold is hot over 13.50. Trading up $16.70 at 13.50, 53.40. Silver over 17, up 40 cents at 17.31. And saw Bitcoin trading in the green too, back over 11,000. So earnings. Let's start with Dennis's favorite stock, General Electric.
You want to start with my favorite stock? You want to know something? I sold half of my investment position. I had to get out. I had to lighten it up. I don't know. I just sold half. A nice rally yesterday. I sold it before the report because I was like, I don't know if they're gonna SHI blank the bed or what's gonna happen here. So sold half of the long-term investment portfolio. Got sick of looking at the big losers, so I cut it in half.
All right, Dan.
That's what you do. That's what I do when I don't know what to do. And I'm on the fence, and especially a lot of times with a winner too. Like, okay, do I sell? I want to sell the whole thing. Maybe just sell half. So that's what I did. So I sold half of my big loser. I had that nice gain that I took, obviously, in the BioVeritab the other day. And I was like, you know what? Let's just take half this loss here in GE. And then if it goes down, I'll kind of be happy because at least I sold half. If it goes up, at least I still have half. So I'm happy. It's up 25 cents. I think they're just getting a lot of trouble. So give us the numbers, Spencer, and then we can analyze.
All right, GE Q4 adjusted EPS 27 cents versus a 29-cent estimate. Sales of 31.4 versus $34 billion. So they missed on both. Fiscal year EPS guidance $1 to $1.07 is the estimate. That's the guidance they gave. $1 was the estimate. So guidance coming in higher than expected for the fiscal year EPS. We'll see what actually happens. But as far as the Q4 numbers, neither of them very good.
All right. Well,
what do you think, Joel? Give us your technical take here.
Well, first of all, I can't believe he didn't do it in December and take the tag. It would have been perfect. So whatever, it did rally. That's water under the bridge.
Hindsight capital there, Joel.
Hindsight capital.
I wish I would have did it in December too. I didn't. I would have got a better price and I would have had the tax.
Moving forward, 17.35 is your pre-market high. So we'll keep an eye on that. I mean, you got two green candles. So let's see if it can get a little winning streak going after a 6-day losing streak. Just look at your daily highs, Dennis. If you can get over 17.48, close above that high, maybe take a shot at 18. But first and foremost, you got to take out the pre-market high. You had a lot of people buying yesterday, maybe for a scalp, off the earnings. Nice rally yesterday. So number one, you got to take out that pre-market high, 17.35. Number two, you don't want to see it go red on the day after. Nope. Yeah. Nope. So if it goes red on the day, it's going to be it's going to be in trouble. So that's,
I think so too. I think it's going to be I think that's a great point you're making. And I think you're right, 1689 is the bogey. If this thing cuts through or whatever reason starts to leak and starts to cut through the open or look at where it opens to. So that's going to be a key point too. So, once we get the 9:30 open, mark that price down because sometimes they'll rally up from there. They come back down through the open. Sometimes that's your sell signal. But 1689 is the bogey here. That thing starts going red. And, I just got this funny feeling it is going to go red. And like if I was a gambling man and, I don't know if I'm going to make a trade on it or not. I guess I am a gambling man because I'm a trader. But I got a feeling they're going to fade this thing eventually. It's just been so many institutional sellers. The report doesn't look great. Little relief rally that, it wasn't a disaster, but come on. They still got all kinds of problems here. So that's why I like my position. I didn't like they were hitting the preferreds, and obviously when they start hitting, or not even the preferreds, the traded notes, that's, a sign for me that, these issues are a little bit bigger. So let's see what happens at 9:30. This thing goes red, it's in trouble.
And, I'm going to buy it when the Deutsche Bank analyst tells me to buy it.
You know what? That's a great point there too, because he knows what he's doing. I wish I would listen to him when he started getting bearish at $29. I was almost flat, so kind of where I was in. I was in from around $30. So it would have been nice to actually listen to that guy. So we gotta, we gotta give him props. And next time he makes a call, Spencer, let me know next time he makes a big call on a stock because I'm listening to that guy because he knows what he's talking about.
Yeah, was that?
What's his name again?
Was that?
Oh, you asked
that
him. We gotta get him on.
I remember. I should write it down on a little, sticky note.
Here,
stick it on the corner
I'll pull
of
it
my
up
screen.
in the pro. I looked at GM.
I don't remember his name.
Deutsche Bank. I'll find it.
I think
2 seconds.
I think he gets
John G. Inch is his name.
Inch. Why can't we remember Inch?
He downgraded GE to sell on May 12th.
And what was the price then on May 12th? Let's go check.
I don't know. Let's go see.
You don't want to know, Dennis.
Oh yeah, I do. May 12th, it was $29. Look at me. I didn't even knew that off my memory. $29. Where is he now? Where's his price target on it now? Did it hit his price target?
I don't know. Honestly, I don't know.
Anyway, okay, that's fine. Let's move on from Inch. GE, still to be determined, we'll say here today. I wouldn't say it's the Bulls are totally in control here, though. Let's go to the disaster from last night, and this created a little bit of a tech wreck after hours, too. Of course, buy the dippers all come in after the fact, but Texas Instruments was an absolute disaster. All your semis were trading down last night. You had even stocks like Intel, NVIDIA, all getting hit on TXN. Disappointing quarter. TXN is still a wreck, but all the other ones bounce back because that's what the market does. TXN numbers, Spencer, from last night.
$1.09, which is in line with the estimate and sales of $3.75 versus $3.74 billion. The Q1 EPS guidance, $1.01 versus $1.17 is the range, and they see sales at $3.49 to $3.79 billion. So that's in line with the estimate, the sales guidances, and the EPS guidance. I don't think there was a guidance estimate, so that's fine. The Q4 numbers again, EPS in line, sales slight beat.
Well, there was something they didn't like about it. Or maybe it was the fact that it's run up 20 points really in the last month, which is 20%. So ran up hard in the report. Definitely not good enough. And that's why the stock is down $8 in the pre-market. It was down $8 after hours. And give us quick technicals here, and then we can tell you about the other stocks we're getting hit as well.
Man, oh man, I mean, I can hardly say that the low is in here. Your pre-market low stands at 110.68. You're trading at 111.11. Big run up in the daily. So pick your poison here. If you're going for your next daily low, I see 110.58. So if you're going to hang your hat on the January 12th low of 110.58, then you got a shot here at the pre-market. So under that, though, you got another buck drop to 109.43, and then $1.25 drop. But first things first, I mean, for bulls, it's holding that January 12th low of 110.58. Now you're a buck off it. So see what happens on the upside here. Man, made a new all-time high yesterday, so it's impossible to find resistance in this. Yesterday's low to fill the gap, 117.46, but do not think we're going to see that today.
I'll tell you, though, this hit all the tech stocks last night. So you had Micron trading down significantly, and they have bounced back. Applied Materials trading down significantly. I got filled on Intel. I mean, it got just silly. And Intel, INTC after hours last night, was trading down 60 cents. And I'm like, you know what? Not even. I got filled at 45. It was actually the low, I think, Joel, the move. 45.41 I got filled on. I think 500 shares down there of Intel, close at 46.06. And bounced right back. I mean, and it's down 20 cents, and you're going to see these things weak. But sometimes when these things, like Intel down 60, 70 cents on this, I don't think there should be that much of a sympathy move. And like we've said, we've been talking about it this year and last year, the sympathy moves aren't as extreme as they used to be. So when you see stocks trading down 3-4%, the leader's only down 6 or 7, it's usually an opportunity to maybe pick up the laggards.
Just noting Intel here, the tizzy with the chips and everything. We've gotten all that back.
Back.
Yeah, I mean, and that gave you a couple shots at the 42.50 area. I was hoping for a gap fill down to 41.58. Buyers stepped up ahead. If you're looking for a target here, we are trading down 21 cents. So let's see what happens at yesterday's high and yesterday's close, right at the same area, 46.06, 46.09. So in the midst here of one. Well, let's see. We've been higher 1, 2, 3, 4, 5 days in a row. So nice rally in Intel off that the 42.50 area.
Then you had AMD trading slightly down. You had NVIDIA trading down. They are still down. NVIDIA, well, AMD's up. NVIDIA is still trading down 51 cents here in the pre-market. Applied Materials is still trading down in the pre-market here. So it was a little bit of a semi-wreck off the Texas Instrument stuff. But again, they bounce back. And that's just what this market is. It's so resilient. I don't know if I see Texas Instruments bouncing right back because they were the ones that disappointed here. But the laggards and the sympathy plays have bounced back. So that's the typical move here in this earnings season. And this
how you
market.
doing in your Intel back, or not Intel, AMD?
I'm almost back to scratch. So it's come all the way back up here. I don't know. I bought it. I got killed on the CNBC fake headline because I bought it because I thought they had the deal with Tesla. They did not. I should have turned around and sold it as soon as that turned out to be fake and ate the loss. I did not. Obviously, the stock leaked. It did come back up after that, and I was like, oh, it's on the comeback trail. I'm just going to stick with it. Then they had the disappointing quarter, and it's come all the way down. Now it's coming back up. You know what? If this runs up into the earnings report again, maybe this is going to be. And when do they report AMD? Because it's coming up. Spencer?
Yeah, I'm gonna look that up real fast. AMD is in the the 30th coming up.
Yeah, so it's coming right up in
after
6
the bell.
days. I think this could continue to run up into the report. If it gets anywhere into the 14 area where there was resistance before, I might sell it ahead of the report. We'll see. So took a lot of heat on this one. It's got all the way back. Sometimes, and they take the heat and they come all the way back. Sometimes it's a good idea to take the position off and get in a better price, but sometimes it's not. Sometimes that's when they really take off. So I just know this earnings season, they've been selling a lot of stocks on okay earnings reports. So that's a little bit of a concern.
And I think it must have been their report in October. It went from 14.25 down to 12.33 in one session. And you created a large gap here. And that gap's from 13.13 up to 14.15. So knocking on the door of the 13 handle, actually trading at 13 even right now. So just be mindful that once you get above 13.13 in this, you got over a point gap to its October 24th low of 14.15.
I would love it to fill that gap before the report, but I don't know if we're going to have enough gas to get there. But this market is resilient. This market's pretty crazy, so it's got the momentum going now. Let's see if it can, take out 13 today, which it appears to be doing. And I mean, you got the relative strength in AMD here too. I mean, you've got all the other semis trading down. You got all the other chip makers trying to trade down on the Texas Instrument stuff. AMD is still in the green, so relative strength is great right now in AMD. Let's move on to the disaster stock of last night. And why I'm calling it the disaster stock of last night is because UAL was trading up $4 on their earnings report. And all the airlines were trading up on their earnings report. And then something was said in the conference call. I forget. I saw the headline go by. Maybe you've got it, Spencer. And it was something to do with capacity. And they absolutely just turned around and killed UAL. So you've seen basically a 9-point after hours range in UAL from being up $4 to now down almost 6. That is an incredible turn. It's almost a 10-point turn here in UAL. What was the high last night, Joel?
Oh boy, this thing got into the 80 handle.
It's dead.
80.95, and then they pulled the rug out on this one and just straight down. I mean, if you were caught long in that, you were dead meat.
It's
70,
fast.
yeah, wow. 71.65 is your pre-market low, and we are not far from that right now, man. And then you go to the daily charts and you're like, oh man, where am I going to find support in this thing? 70.45. That was your January 10th low. So we'll keep an eye on that. It get into the 70 handle. After that, another $2 drop to 68.39. So I don't know what they said in that conference call or what they saw in this report. But
well, Spencer will give us those numbers, and Spencer will have what they said in the conference call.
Well, yeah. So the earnings, $1.40 versus $1.34, and sales of 9.438 versus 9.42 billion. So good Q4. They did come out with on the conference call. They come out with some guidance, and they see fiscal year 18 capacity growth at 4 to 6%. That's what was disappointing. The EPS growth it was fine, $6.50 to $8.50 versus $7 estimate. So that was mostly okay. It was really the capacity growth that the 4 to 6% is not good enough.
Yeah, and that gets into the fare pricing. So they were worried that potentially these airlines could get into a pricing war all of a sudden, and that's why they started hitting every single airline too. So it's not just UAL that's a disaster today. Delta's trading down $3 in the pre-market. LUV Southwest is trading down, and it's one of the more conservative ones, trading down almost $3 in the pre-market. Spirit Air is down $2. SAVE. You've got Alaska Air, ALK. It's down 5%. These are all down 5%. And that's because they're worried about a pricing war here with the airlines.
And we've just been talking, and Spinner's talking about. Oh no, that was Intel. We had a guest. Were we talking about higher oil prices and the effect on the airlines?
Well, that's what doesn't make sense to me too. I mean, oil is on the comeback trail, and if you look throughout history, there is a negative correlation between airline pricing and oil. That's what I've been saying. In the last 6 months, that has completely been blown apart. Oil's rallying, airlines rallying, cats and dogs are rallying. I mean, it's just the type of market where everything is just rallying. So they don't even care the market. They were just buying everything. But when stocks go out of favor and when groups go out of favor, they stay out of favor for a long period of time. And that is the concern here, is that if this all of a sudden is the turn, remember, the airlines were absolutely hated in the first part of 2017. They caught a bid late in 2017 and then never looked back. You had UAL rally in November from $57 all the way up to 81. Along with oil. Oil was rallying at the same time, which you would think is counterintuitive, and it still is. Fundamentally, it doesn't make any sense that airlines are going to like an oil rally, but they were just buying everything. Market didn't care, buy that too. So now you wonder if, it doesn't eventually come back into play where, you could look at oil prices and look at airlines. If the airlines start to go out of favor, then the oil price will start affecting them again.
All right, coming out of the Google chat, Walls J. What is going on with Baba? I'd say Baba is just being Baba here.
It really is.
You broke out, man. You had a pesky seller at that 192 area. You took that out. You're making a new all-time high. So if you want to find a target on this on the upside, your pre-market high is 195.88. Spencer, we got any news on Baba today, or is just Baba being Baba?
I checked the PR news wires and I didn't see anything on Alibaba. So no news.
Okay.
You want to know something? No, what? I got the news for you. And this is how crazy this market is. Alibaba was trading flat last night. Flat and actually down. It was actually down because all the other tech stocks, and it's kind of a tech stock too, but you had the Text Instruments disappointment. The Qs were trading down 50 cents. They were hitting Baba a little bit too. Tim Seymour comes on Fast Money. There you go. Buy Apple saying. I was just going to say the same thing. Tim Seymour comes on Fast Money and says he likes Alibaba and would be buying it at this all-time high. And I was like, I watched Alibaba go up 10 cents. It goes up 20 cents. It goes up 50 cents. It goes up $1 in the next 10 minutes. I was like, are you kidding me? Are you kidding me? Tim Seymour, and I like Tim Seymour. He's a great guy. But come on, he comes on our show, man. He comes on our show. He has this much influence that he can drive Alibaba's price up 1%. That's one of the thickest stocks out there. And he drives it. He has that much influence. CNBC Fast Money has that much influence. You got to watch it. It's unbelievable. They never had that kind of influence before. But you know what that tells you? that tells you that this is a retail-driven market right now. It really is. Like sometimes, and the institutions are always the ones that really drive price. But retail is driving price too, because there is no institutional trader that's coming in there and saying, oh, Tim Seymour likes it. I'm going to go put, Nick Fidelli isn't saying Tim Seymour likes this. We're going out there and buying Alibaba. There's all your retail traders that are saying, oh, I got to buy this because Tim Seymour likes it. I like Tim Seymour. He's been on our show. He is a great guy. It's crazy that they're moving stocks 1%, 2%, 3%. If they give some illiquid stock, I watched Karen Feinerman talk about some stock. She moved it like 7% last week. Or 2 weeks ago. It's unbelievable the moves and the influence that they have right now. They're almost more influential than an analyst. And that's just because there's so many retail traders participating right now. They love the bull market and they're just going in there buying the stock. And that's what drove the Alibaba rally. It was Tim Seymour saying he liked the stock.
Yeah. Well, if you want to wait, if you're long it, it's up. It's what you want to see it take out that pre-market high. At this point, maybe hold out for $200. I don't know. It can zig and zag its way, getting to 200. But right now it's in the middle 190s. That's a magnet. If you're looking for a gap fill from yesterday, closed right on the high tick. 92.40 was the high, 92.28. So anybody that's ever shorted this stock is underwater. Gap fill 192.40 was yesterday's high.
Jump over here. There's a ton of earnings stocks here, so we've only covered 2 in the first 21 minutes. But
really?
Let's jump. Yeah, well, I guess it's just UAL, Texas Instruments, and GE. So I guess we covered 3. Let's jump over to UTX, another Dow component here. It's trading down slightly here in the pre-market. Spencer, give us those numbers.
UTX Q4 adjusted EPS $1.60 versus $1.56, sales of 15.7 versus 15.4 billion. So they beat on the EPS, beat on the sales. Fiscal year guidance EPS coming in higher than the estimate, or actually pretty much in line. Sales guidance coming in line as well.
UTX trading slightly down here, Joel. I don't know what to say. It's kind of wishy-washy when they're only down like 50 cents on an earnings report here. It's one that's run up to, UTX is a little bit more conservative issue. It doesn't have the volatility that some of the other ones do. Maybe it's because of the Dow component, but also got a dividend of 2.07%. Thoughts here on the UTX report?
Just kind of hanging out here, only down 64 cents, quiet range yesterday. I like to see it get green on the session. That's 136.03. Your high was up in the upper 136 handle, 136.48. Above that, you have your all-time high at 37.73. But let's see it get green on the session. That means they like to report to take it higher. Under 34.50. That was yesterday's low. You got a buck drop to 33.60. So looking for it to go green for the continued rally. And I don't know. It kind of quiet ranges after making that all-time high. So may see some profit taking in this one.
We'll just fly through, or actually I'll just list off the other ones that had earnings. And if you want to talk about any of these and obviously the charts and start to get into the details, let us know. But we're just going to run short of time because there's so many earnings stocks. COF reported last night. They missed. It's trading down $1.71 in the pre-market. Comcast reported they're trading down 50 cents. RCL, Cruise Line, Royal Caribbean, is trading up $1 on their earnings report. General Dynamics is down 3 on their earnings report. Abbott Labs trading up $1.50 on its earnings report. And then tonight you're going to get some big ones too. You're going to get Ford, you're going to get Las Vegas Sands, you're going to get Whirlpool, which had a great day yesterday on the tariff stuff. Anything you want to talk about specifically, Joel, or can we jump over to this biotech news?
Oh, let's go biotech news. And if someone hops in with some, a particular earnings stock, we can focus on that.
PBYI. This is your disaster stock of the day. Puma Biotechnology is down 25 points here. Spencer, what are the details on this one?
PBYI reported a negative trend vote after meeting to discuss approval for their drug neratinib, and the trend vote indicates additional steps would need to be taken to gain marketing approval in Europe. So not good news for PBYI there.
I don't even know what to say here.
I would add Adam Feuerstein from Stat News. Thank you. Adam Feuerstein from Stat News commented this morning with the European approval unlikely, it makes the M&A narrative more challenging too. Or actually, that was in a note from Cowan.
Disaster, right? And then, obviously biotechs, are prone to this. You get this random news, and that's one thing you've always got to know when you're investing in a biotech stock and you're holding these things overnight. There's always the risk that it comes out with some bad drug news and you get hit. And that's why I don't like getting heavy ever on a trading position in a biotech stock. It's one thing to invest in them, and I still like my diversification, but on biotechs, like you'll see some traders come in and they'll put 100% of their capital on a smaller biotech and say, well, if it goes down like 10%, I'll get out. You sometimes can't.
You don't have a choice.
So you don't have there's no choice in that. You're down 27%. So if you were margined on this, you could blow out half your account on something like this. So that's why on biotechs, it's very important to stay diversified. I always think stay diversified in your trading portfolio as well. I never like to have more than 5 or 10% of my capital in one specific trade, just because random news can happen to anything. But biotechs especially. Even holding overnight, I'm always a little bit more cautious when I'm trading with the biotechs, just because I'll take like a half-size position, just because there is always that bad luck you can happen that they come up with some random drug news and you get killed. Sometimes the random drug news can work in your favor too, but you just don't want all your eggs in one basket, especially in biotechs.
You got a pre-market low. This is a little bit of an interesting chart here. Just the fact that you made your pre-market low at 60 even. Nice round number like that. And now you're getting a bounce, but it's really quiet here. Bulls and bears are squaring off here. Let's call it a range since that 4 o'clock open. Let's see. No one wanted to make a trade until 6 o'clock, but you're definitely holding like a 64.50 to 67 range. $2.5 range is pretty significant, but not when you look at how far it's fallen. So above 67.50, you got some obvious room on the upside. Now that you got someone buying at the 64.5, 65 level, I think if you get any further declines, you could have a short, bring it in. That's a big windfall overnight, if you're on the right side of the trade. So getting a period of consolidation here in PBY.
Jump over here just to our blockchain stock of the day. If you want a little one here, it's SPI. SPI Energy is trading up 37% this morning. The headline breaking at 7 o'clock. SPI Energy signed strategic pact with QX for blockchain services. Yay, blockchain. Anyways, stock has been on a death march. This was an $80 stock back in 2016. It was a 90-cent stock yesterday. It's a $1.27 stock. Is this, the turnaround? They're now a blockchain player, potentially a blockchain, have blockchain services. It's given a little lift off it, but these trades have been more fades than buys almost every single time.
Yeah, you got a little pop up here to 160. That was your, let's see, yep, 159.
Got to $1.60, eh? People are nuts.
No, actually, it got to $1.60 a couple days ago.
Oh, okay.
Yeah, your pre-market high.
They're not as nuts as I thought.
Now 145. So that's a whole area, 145 to 160. That represents. They must have had some news out a couple days ago too, when it had to pop. Maybe as they were thinking about blockchain, but they got that pop above 160. Yeah, 160. It opens up, coming back on the downside. Real quiet range yesterday, only a 4-cent range. So you do not want to see this going red on the session.
A couple stocks coming from the chat, and yes, I want to talk to Dr. J about that Mattel move yesterday. Mattel Hasbro rumors kicking around here again. That is why MAT, and you know what I'm kicking myself here for too, is I actually looked at this. There was so much consolidation at the $15. I looked at this last week and I was thinking, you know what? I wonder if those rumors materialized again, this thing would really get a pop. And then I forgot about it. And here it is. A week later, it gets the pop on the rumors here. Again, gets up to 1888. I don't know if it's going to be a deal to be had here. I think, and there's a good point being made by one of my buddies at Bright Trading. He says, Mattel, Hasbro, kids don't want toys anymore. They want electronics. So they're both, a little bit in a struggle there, because the kids, like my 3-year-old much prefers his iPad. Not that, we limit the screen time as much as we can, but it was up to him. He wouldn't have any toys. It would just be iPads. So, and then you start to get older kids, and, I used to play with toys, and play with my He-Man figures, Star Wars figures, all that stuff when I was a kid. Not now. They don't like that stuff nearly as much as their electronics. So I think Mattel and Hasbro both have an uphill battle just because of the electronics that the kids like.
Hey, did you have a short on that thing on the initial pop?
I did.
Did you get shaken out of that?
No, you know what? And I didn't, and I got scared out and spooked out of it. I shorted it. This is going back. Oh man, you got to go back here on the charts here. Let's see. So we got the original rumor back in November, and it got up to like in the 18s. And then, so I shorted it saying, I don't think there's going to be a deal. And I held it for a few days. And then there was another rumor that there could be another buyer from Mattel. And it went up over 19. I was like, I don't know, So I hesitated on it. It was still hanging on the 18s. I ended up, I think, actually scratching the trade. Ends up, a month later, if I would have held it, it goes back down to 15. So it would have been good. My initial instincts were correct, but I got spooked out because there seemed to be too much interest in Mattel all of a sudden. And then I got scared. Somebody said there could be as much as a $28 takeout price. And then I was like, wiggling in my chair, nervous on it. So I ended up taking it off. I shouldn't have.
Just a quick note here on Mattel, Dennis, and this is one trick that, you've taught me and we've watched over the years. You had a close at 1462. This was on November 10th, and that's when you had the rumor, right? Boom, it rallies the next day. Rumors don't materialize. But look where it came all the way back down to. I mean, it didn't give you quite a gap fill. But yeah, it did. It came back down to 1456 on December 13th. So you kind of got a replay of it, right? And that's probably what you were looking at. This is where the news came out. You got the pop, came back to the point of origin, hung out for a while, and now the rumors resurfaced again. So, and that's when I talked to people about some of these blockchain stocks, like Riot. I just saw we got some news on Riot. Wait when the news, this has had a lot of run up. Maybe this isn't the best example, but more with takeover stocks. If there's a rumor, it rallies, it comes back to the point of origin. It's like you're getting a replay.
Riot was a good point, though, that you brought up, because remember originally it had the big pop from like 10 to 23, and then it came all the way back down to 12, and then it just kind of hung out there for a few trading sessions. You know what the play is? Like when they get the big pop, then they pull back. If they get to the price of origin, that's great. But sometimes they consolidate and they start to get they get a little wedge forming there, and they start to look like it's consolidating and banging its head up against maybe a couple of days of highs. Well, that was the play when Riot was like the 5th, 6th, and 7th when it started consolidating and stopped going down. Then you think, okay, next headline could really drive it, and it did, and then it really blasted off after that. So sometimes the play isn't to buy the initial break. Sometimes wait for the pullback, then wait for the consolidation, wait for it to stop going down the pullback, and then starts to, maybe inch its way higher, then you strike. That's the best time to strike. So the time to strike in Riot wasn't, the day after November, 24th when it's at $23, or even the day after that when it got down to 15. When it consolidated and started looking higher in December 5, 6, 7, that would have been your time to strike. And then we had the news on the 11th, and the stock was off to the races.
I just want to address John Dotson's question up here from a little bit ago. Indexes are well over the 50-day moving average. You think a 2 to 3% pullback. This market doesn't pull back.
It's going to pull back, John. I'm telling you, eventually we're going to have a pullback, and it's going to be significant. But man, if you're trying to call that, who knows when it's going to happen? You could get lucky and call it right. But I tell you, a lot of people thought we were going to pull back in 2018, and it's just up another 7-8% of this market in your face. So you're looking for a 2-3% pullback when the easy money's being made on the long side, because everybody wants to call the top. And that's why the market keeps going up, because everybody keeps trying to call the top. And it's a difficult gig. It's a difficult thing to come in and just say, this is the time where it's going to turn. I've tried to call the top multiple times. Joel's tried to call the top multiple times. We've been wrong every time because it keeps going up. So I'm done trying to call the top. I'm going with the flow until it gives me a reason, where we get a break maybe of a moving average, or we get, a couple lower lows, something, or maybe some other catalyst. But it's so difficult to make money trying to be the hero and call the top. And that's why I'm not fighting the tape here. The majority of my trades, and I'm a stat arb guy, so I've still got lots of shorts on. I've tried to stay market neutral as much as I can. But I'll tell you, I'm always biased. I never enter a day short right now. I used to always, I think the market's going down tomorrow. I'm going to enter this day short. I'm always hedged at least, and I often hedge myself a little bit heavier to the long side, just because, even last night. So here you are. It looked like it was going to be a tech wreck day. Texas Instruments is down. All these tech stocks are down. Qs are trading down 50 cents. SPY's down 40 cents. And I look at that, and I actually was a little bit net long coming into today. So once I hedged myself out, I've got a lot of positions. I have 24 positions on from, trading just from last night. And now, I look at it, I'm glad that I bought, some extra Qs. I bought a little bit of extra SPY just because this market is so resilient. And when the dust settles, I'm like, we'll probably be up tomorrow. And here we are. We're up tomorrow. It's silly, but it's working.
All right, 8:35. We're going to take a quick break. We're going to grab our guest today, Greg Harmon. He is the founder of Dragonfly Capital Management. We'll be right back in a moment with Mr. Harmon. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. We're on the line with Greg Harmon, founder of Dragonfly Capital Management. Greg, how's it going today?
It's going great, guys. Good to be here.
So, Greg, I want to start off with a question from our chat that we had a few minutes ago that we were just kind of discussing. John Dodson pointed out that the indexes are all well over their 50-day moving averages. When do you think, if or when, will there be a 2 to 3% pullback? Do you ever see that coming ever?
I mean, it's definitely the time that that I'm getting cautious about that. But who knows when it's going to happen? As traders like to say, overbought can get more overbought, and it can keep going higher. Things like the S&P 500 are certainly getting steep. So you would expect that at some point it's going to correct, but that correction again could be just through time, just a sideways action like we saw in 2016. So what if we don't ever get a 2 to 3% pullback? That could happen too.
All right, Greg, let's go your first chart here. And this is an interesting one. The XLU, I mean, interest rates are going up, right? So this is going, the trend that, if interest rates are going on, other places to put your money out of the utilities, dragging down here. Now, this chart, are you looking for a bottom here or a little reversion to the mean trade? Tell us what your thoughts on the XLU.
Yeah, I noticed this and wrote about it this morning on my blog that, after that big run up into November last year, the pullback here has found support at the 61.8% retracement level, the key Fibonacci level. And yesterday, it started to pop out of there. So I'm looking at that with the momentum indicators there starting to turn back up too. That MACD cross at the bottom of the chart to the upside is a buy signal for many people. So I think that this one is one now to look for maybe some outperformance in the short run against the bottom that we had last week. Buy now and use 49.75 as a stop or something like that.
All right, moving on to the U.S. dollar here. You got nice looking chart for here. We've had a little bit of a rally. Looks like you're finding some resistance at a retracement area as well. Tell us what you're looking at in the USD.
Yeah, I mean, the chart that I shared with you is a long-term monthly chart, 20-year monthly chart, and shows a big pop out of a triangle in 2014 that hit that we've been experiencing the strong dollar phenomena for the last couple of years, and we had a pop down or a drop down out of that last year, and then kind of a quick recovery. But now it seems that the dollar is really starting to weaken more. And as I look at the dollar index this morning, it's cracking 90 for the first time in over 3 years. Looks to me as if we may be on the path of a retracement back down to around the 80 level for the dollar. One of the key levels to look at there would be the 200-month moving average, which is about 88.75, somewhere in that range right now.
All right.
Well, below that, it's going to be hard.
I gotta go here. I gotta talk about Bitcoin. And do you think that that's having any effect on the dollar? I mean, other circumstances are working against the dollar right now. But have you been following the Bitcoin mania? Did you get involved at all, or just not your cup of tea?
I am a latecomer to this party. I'm actually starting to teach a course this fall on fintech at Case. Don't ask how I got involved in fintech. I know nothing about technology, but I've got a lot of friends that do, including your boss is coming to talk at my class next week, Jason.
Oh, really? I didn't. Yeah, I didn't know that. Oh, that's great.
So I figured, if I'm going to teach a class and talk about cryptocurrencies and the such, I better get involved here. I did not get involved with Bitcoin. I did buy some Ethereum and some Litecoin back around Thanksgiving. Ethereum has certainly done a lot better than the Litecoin. When I look at Bitcoin, I see since the touch at just under 20,000 and then the retest at that level again, that it's been falling in like a pretty defined channel. And over the last, like 3 weeks, settling around the bottom of that channel and now below its 100-day moving average. It doesn't look at this point like it's ready to be ready to stop falling. The other ones, Ethereum and Litecoin. Well, Litecoin looks very similar to Bitcoin. Ethereum looks as though it's trying to hold on a little more. Maybe there's more strength in that one. So that if you want to be in one at this point, I would look more towards Ethereum than Bitcoin. Why'd
you go towards Ethereum and Litecoin as opposed to the Bitcoin?
Well, the time that I got in, around Thanksgiving time, Ethereum was starting to break out and was looking a lot more attractive than Bitcoin that had already gone through this parabolic move up into, from October up into late early December. By Thanksgiving time, it was already double where it was in September. So it just looked like it might have been overdone at that point, whereas the others had not broken out yet.
All right, let's move on to the next chart here. And I hope Dennis is not looking at this General Electric here. Now up 74 cents at 17.
I told you I'd be happy either way, Joel.
Oh, that's right, because you sold half of it.
I sold half.
Okay. What are you looking here? I mean, what an ugly looking chart of good old GE here. Had a selling balance on Monday of well over 2 million shares. Someone just couldn't take the pain anymore, and that marked the bottom of almost 2 points ago here. What are you looking? A little reversion of the mean here, traded GE? Tell us what your chart says.
Yeah, my chart shows a sideways channel there from mid-November through to the beginning of this year, and then what I thought at that point was going to be a reversal. Of course, that failed when more and more bad news kept coming out, and it does look like a couple of days ago we have hit a bottom here as volume was exhausting on the way down, and now I wrote to my subscribers yesterday when we were talking about earnings trades on GE that this could be the kitchen sink earnings report. Toss everything that's bad in there. And, sentiment can't get any worse for this stock now. It's been down for what seems like 5 years in a row. I'm sure it's less than that, but it seems like it's been 5 years in a row, and maybe it's time for this thing to bounce. I've got some longer term calls that I'm holding in this, some 2020 calls in this, but they're well above where the market is now, given that my thought was maybe we saw a bounce in November.
Okay. This next chart is very interesting here. The Material Select Spider Fund here, you've had just a real nice run up, but after every move, there's consolidation. And here's a consolidation phase in the Select Spider for materials. What are you thinking here? Just quiet consolidation, resumption of the trend?
Yeah, this one's a bit trickier, right? Because it's consolidating in a diamond pattern. A lot of people will tell you that the diamond pattern is a topping pattern, but it's like any other consolidation pattern where it could resolve either to the upside or the downside. And if I look at the momentum indicators around this to give me a clue as to which way it might go, RSI is really strong. It's pulled back from being overbought, so maybe it's ready for another move higher. But then the MACD, my other momentum indicator, is looking like it possibly might cross down, which would be a sell signal. So for me, it's one of those. If you own the ETF, it's time to maybe shift into options instead to take some risk off, or either protected against the 62 level on the downside. I think if it gets below 62, you might see a retrace back to the 58 area. If it gets above 64, of course, you've got that maybe the third leg of a three drives pattern that takes it up to 70 or so.
All right, moving on here. Wow, GE up to 86 cents, 17.75, making new highs here. Wonder if there's something good on a conference call. Just want to go to a couple commodities here. First, let's go to crude oil. Quiet trading range. It had a nice bump up. Trying to get into the 65 handle. Had one other high at 64.78. We've taken that out today. Any thoughts on crude?
Yeah, I mean, I see a lot of people that trade crude. The sentiment is really they can't believe that it's going up this high. But I think the chart says that we're breaking into multi-year highs here. There's not a lot of resistance until you get up to if you get over 65 until you get up to say 70 or even 75. So I think it's got more upside in it.
Okay, just one stock. We'll do one stock out of the chat here. Las Vegas Sands, LVS. Give us your technical thoughts on that.
Let's take a look. This is not one I watch closely. So
okay.
This one's had a good run here since the beginning of 2017, and then an explosive move that started at the beginning of this year with a really strong move the last 2 days. I don't know what they reports, but it probably has just recently reported or will be soon. Tonight, okay. Yep. And you're coming into it today. Yesterday closing with what looks like a shooting star top on it. Well outside of its Bollinger Bands. Its momentum is really overheated on this. If I were to play this for earnings, I would put on something like a 1x2 put spread to capture some downside and possibly be able to get into the stock lower.
Some big technical jargon in there for our listeners there, Greg. Just explain shooting star top, because that is not one that our chatter listeners hear every day on our show.
Sure. It's a Japanese candlestick pattern, much like maybe you would have heard an evening star, or maybe if you're not a fan of candlesticks, it's a three candlestick pattern where you've got a long, strong move to the upside, followed by another gap up to the upside that runs much higher and then pulls back intraday to close near where it opens, leaving a long upper shadow or wick, some people would call it on the candlestick. It's a sign of intraday exhaustion, and it's confirmed with a move lower, and I see it's not looking like it's going to open lower, at least today. But a close lower today would confirm this is a reversal to the downside. from a technical perspective.
Greg, one more before I let you go. Question from our chat. Can you please look at GII, the S&P Global Infrastructure ETF?
This is actually a surprising one for me. Given how you called it, the Global Infrastructure ETF, I would have suspected that this one would be lights out to the upside as well, but it's not. It seems to be stuck in a range between 51.50 and 53.80, somewhere in that range, with maybe slightly lower tops as you go along. This one to me looks like it's something to watch. You've got a momentum divergence to the upside, so maybe it will gather some strength. But until it gets over, say, 53.50, breaking over the highs from early December, I'm really not that interested in this one.
All right, we've been on the line with Greg Harmon. He is the founder of Dragonfly Capital Management. Greg, thanks so much for joining us today.
Thanks for having me, guys.
All right, what time is it? 8:51. Dennis, can we get a quick look at the imbalances? We haven't talked about that yet today.
Yeah, there's some big ones here. GE is now 768,000 to buy. Continue its rally here. 1785, nice relief rally, squeezing some shorts. I've sold half mine now, so maybe that was the bottom there, Joel. Johnson Johnson, 104,000 shares to buy. That's significant. I had a horrible day yesterday. I wish I would have held my short. I shorted it on the earnings report, and obviously was right with the call. The stock was trading upwards of 151. I got short just under the 150. Or no, where was it? Was it 151? J&J, yeah, because didn't I get short? Yeah, because I got short like 149. I'm looking at the charts because it was in the pre-market, and you say, how did you get short up there at 149.90? Well, that's because it was trading up, and obviously these are intraday charts, and they don't show pre-market action. Wish I would have held it. It came back down to scratch, and I got out, and it just kept falling. I mean, Verizon too yesterday. Great call by Jason Raznick live on our show. Stock was trading at 55. It went up to 55.5 during his interview when he was pounding the table to short the stock. And the stock obviously went significantly lower after that, and it's trading down here again. Just looking at imbalances, other ones here that stand out to me this morning. Alibaba, 73,000 to buy. We know the strength we've seen in that one. Goldman Sachs had a big sell bounce yesterday. It's continuing here today. GS is a 51,000 share sell bounce. Keep an eye on that because, as Spinner was saying, the TLT is significantly down today. That is typically good for banks. So some of these banks open weaker might give you an opportunity to buy them on the cheap, although the TLT has bounced back from the lows just in the last few minutes. Colgate Palmolive CL 88,000 to sell. We don't talk about that one a lot, but that is just a big imbalance for a stock of that size. ExxonMobil 89,000 to sell. Square I usually like to look at. Square hasn't posted yet, so I don't see a sell and balance or a buy and balance in Square at all. And then that's about it. I mean, the big ones standing out are GE, and obviously that's off earnings.
Yeah, boy, GE now up 5%. I just want to talk about the J&J real quickly. Hit a nice level yesterday. You came all the way back down to have a gap fill in this one. From January 8th, you had a gap, and it came right down. The high on, it was a 26-point gap, or 26 cent. So that came down to 141.62, filled the gap at 142. So keep an eye on yesterday's low here. They really beat that stock up on a decent report. So important info to hold yesterday's low. Goldman Sachs, Dennis, this thing is looking itchy here. Look at all these highs you've had in the 262, up to 262.87. That was your 2-day high. Actually, you've had 5-6 highs here, so still $2 away from that. But Goldman on the verge here of a breakout that can clear 262.
Again, big sell imbalance. So I think Goldman Sachs could open down. It opened weak yesterday. It's a trend now 2 days in a row. We've seen big sell imbalances. So some institutions lightening up on their GS position, but sometimes that gives you an opportunity. Like I said, when you got all the other banks up and Goldman opens down, sometimes gives you an opportunity to get in on the cheap for a day trade. 855 here. We didn't do any ratings yet. There is some of note. Speaking of Goldman Sachs, they downgraded, or they didn't downgrade. They initiated VRX with a sell here this morning. That is probably your big move of the day, at least from ratings land. VRX trained down 5% as Goldman gets bearish. Spencer, did they give a price target on that? I didn't see on the VRX from Goldman.
No, I didn't.
If there was a price target.
See one. Oh, they did. $18.
$18. So initiated sell, price target $18. Stock's down $1.13 in the pre-market. Ugly morning for VRX.
I mean, VRX has had a nice run. They pounded it off initially, took it down into under $21 to 20.65. Recovering now back in the $21 handle. So I don't know about this one. Had a big run up. People still short, a lot of shorts in this thing, might be using this for a little bit of a pullback, especially, I mean, we're now 50, 60 cents off the low. We've taken out your well, keep an eye on 2107 even. That's your 3-day low, and that's ahead of the pre-market low. So getting an initial down move here. I'm not sure this one's going to continue on the Goldman Sachs downgrade or initiation of the sell.
Anything else from ratings land, Spencer? There was a few. There was an Amira note that was bullish. A lot of tech stocks there. They just initiated. These were all initiations. They initiated Red Hat at a buy. They initiated Microsoft at a buy. They initiate Oracle at a buy. A couple smaller ones, MULE. They initiate that at a buy. APTI. They initiate that with a buy. And VMware, they initiate this with a reduce. I do have a trading position on VMware, so I'll limit my comments, but what are your thoughts here on, let's go to VMware here, Joel. Reduce with a 110 price target, significantly below where the stock's currently trading.
Well, I mean, they're doing it just as it makes an all-time high, trading down $3. I don't know if what kind of volume is trading on that. Not much, 5,000 share print, and then 100 shares at 135 even. Big run. Your 3-day low is 134.85. So actually, that's your 2-day low from Monday. So keep an eye on that. If not, it falls off to 134.01. One other stock that I wanted to cover, and we always like to see how stocks are going to react to news, good news or bad news. Well, 2 days ago, you had Anthony Noto being rumored of leaving, right? They hit the stock on that news. And then when he actually did leave, they hit it again, and they hit it all the way down to 22 even in the pre-market. I was hoping it was going to get down there in the regular session, but no can do. Rallied back to close at 22.75, 22.87, trading up 12 cents in the pre-market. I talked to Sean yesterday, Sean Udall, and his comments was that it's Jack's company, and his leadership has created the turn in the company, not what Noto has done. And then his other comment was, being as contrarian, looking at the news, the setup for Twitter's Q4 earnings is better now, giving the new rush of negativity. So Twitter bouncing back from yesterday's news.
I mean, we talked about it when it was trading down. I thought the low was in at $22, and I thought there might be underneath demand, and that did happen. Stock didn't even come close to going down there in the regular session. It was 22.51 open near the lows and bounced up. I think stick with that low, 22.51. That's your bogey there. It takes that out. I don't want no part of it, but I don't mind bottom fishing here in Twitter. I kind of like it. I liked it yesterday when it was trading down the lower 22s. I like it here still today, even at 22.87.
Holy moly. Did you just see what GE did here, Dennis?
Do I want to see?
No, yeah.
No,
I
it's
don't know.
puking now.
What happened? Holy
Well, it's GE. What do you expect? It's going to be a fall eventually. I mean, they're going to say something. Here, it's a stock that if they would just not say anything, it'd probably go higher. But they are, they ought to come out with bad news because the company's just performing so poorly fundamentally. So anyways, I don't know if this is going to continue. They obviously said something. It's trading crazy here right now. So obviously something was just said during the conference call or something. Somebody said something here because this thing is getting annihilated from where it just was. GE, SEC is investigating situation after. Okay, no, wait. So GE, I'm just trying to see if this current headline here. There's so many headlines. I don't even know where to go. There's some type of SEC investigation. I'm not sure if that was the headline. There's 10 million headlines here on GE. Spencer, you see what just drove us down?
There's so many that nothing.
You get lost here in GE headlines. I'm just trying to look through all what's being said on the conference call here.
I don't know what this.
All right,
GE is on track to shrink the board. They're in talks over 20 dispositions. Cash is their number one focus. Cash was their number one focus. Okay. So they got cash problems. There's a lot of problems there, GE. Right. So we'll see. It's bouncing back. I would definitely still say my bogey is that you don't want to see this thing go red on the day.
All right, Spencer, 8:59. You want to finish up today's show? Let us know what's on the docket for tomorrow.
Hey, yeah, on the docket for tomorrow's show, two guests. One of them, Dan Zanger, Chart Patterns is his site. He's a favorite. Also, we're going to be joined by a new guest on this, and he goes by Spinner. In the chat, he'll be joining the show tomorrow.
Spinner!
Which leads me to my next point. If you do listen to the show and you're in our chat, or you have some ideas and you wanna hop on one day and talk with Joel and Dennis, you just email us. PreMarket at benzinga.com is the email address for the show. If you want to just reach out to us and say what's up, or try to get on the show, and that's how you do that. So we're joined by Spinner tomorrow and Dan Zanger. That's on tomorrow's show. But if you want to catch any part of today's show, podcasts on iTunes, SoundCloud, Stitcher, or just rewatch the show, youtube.com/BenzingaTV to do that. Thanks to all you who joined us today on YouTube and premarket.benzinga.com. Thanks to our guest, Greg Harmon. Hope you all have a good day. We'll see you guys tomorrow.